Good evening. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 16th of November. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some volume and learn from it, transfer it to your own charts. I'm not here to issue trading signals. This is a video for paying subscribers at CTM The Bigger Picture.substack.com, and is published on YouTube after a delay of a week. All right, great. Let's have a look at ES. Okay, we had another impressive day. Down, we saw a pretty strong rally off the bottom. That was about 50% of the preceding decline. But I gotta say, we are halfway through November, and we're not really seeing a bullish month, because not only have we actually been seeing some impressive action to the downside, albeit halting and much of it retraced, but we've also not been seeing this not breaking up. That's actually pretty encouraging. I'm thinking we may well see significant more downside, but I'll talk more about that on the bigger picture charts. All right, we had a whole load of positive divergence across the board, really, on Friday morning, and we lost most of that divergence. We lost the divergence on ES and on NQ. We still got it on RTY, which is important. I'll come back to that. YM, we lost it. DAX, we lost it. And ESTX, we lost it. So we went down and we eliminated most of that positive divergence apart from RTY. Now, RTY, we've got a double top that's broken down here. I'm not actually paying much attention to this pattern because there's a more significant pattern on the IWM chart, which I'll be watching. YM, we've got a very nice looking double top, and it hasn't broken down yet. On DAX, we've got a double bottom that's broken up and maybe failing, too early to say. ESTX, there could be a topping pattern in here somewhere, but I think maybe a part formed head and shoulders, but it's not necessarily anything. All right, let's have a look at the bigger picture charts. All right, let's have a look at the daily charts first. Okay, daily charts. We saw a breakdown and then another day down. So we've broken back below the daily middle band and confirmed the close below on Friday. I'm wondering about another move up, but I'll talk about that after I've had a look at the IWM chart. So here, SPX, again, we have gone down. I am wondering about a possible triangle forming here, because you can see we've got a pretty decent looking trend line here with basically 1, 2, 3, 4. Not bad looking at all. We will see. We've still got the RSI 14 sell signals. We haven't made target on any of those, I don't think. Q is still well short. Dow barely moved the needle because Dow has been the strongest here, but I'll come back to that. We did see a close down below the the daily middle band on Dow on Friday, and that was new. All right, let's have a look at IWM, because IWM kind of looks like the driver of what's happening here, in my view. There we had a strong move down and a pretty strong rally, and we've got here a pretty decent looking pattern, which is a head and shoulders which has broken down, and that's broken down with a target in the 219.5 area. I'm taking that pretty seriously. We aren't necessarily going to make it, but what I would say is, if you have a look at the way this has been going, it's people think of loss of confidence and everything goes down. Well, actually, no. Topping tends to be a process, and one of the reasons it tends to be the process is I talk every so often about you hit the 3SD lower band and you tend to get a rally from there. So you need a degree of sort of practice runs to actually turn the daily daily middle band down and start expanding the Bollinger Bands. You can see when we made this low here, we went slightly through the 3SD lower band, and that delivered a strong rally. Here on Friday, we actually went below the 3SD lower band as well. The low was at 233.27. And that's below where the 3SD lower band closed at the end of the day. So that is, again, another hit. If we see a decent rally here, and I'm thinking we probably see at least another day, then this will give us more time to widen. This will turn down further the daily middle band, and then that gives us more range to the downside. So this actually is, these strong rallies aren't a sign of bullishness. They're kind of what I would expect to see if we were gearing up for a larger move down. And as I said, we may well be, and this is a pretty nice looking head and shoulders that's broken down, and I'm taking that 219.5 target seriously. What would change my mind? Well, on the last rally, we held the daily middle band as resistance. And something I was talking about on the pre-market. It's something I was talking about on the pre-market videos. And saying that if we didn't see a break back up, then obviously that was a fail. And we failed, and we went down. We'd made a lower low, and obviously we've got a possible head and shoulders that has broken down. On the hourly chart, this could have been one of two patterns. Now, so this is the same head and shoulders that I'm showing on the daily chart here, but here I've got it drawn in as both patterns I was looking at here. One, I was looking at a possible bull flag. And two, I was looking at a possible head and shoulders. So you quite often get this at inflection points where you have patterns pointing in both directions. In fact, I'll be showing you at least one more of those when we talk about the dollar today. So, but here we've seen a breakdown from here. Could this be a bullish underthrow? Yes, but it usually wouldn't be. As long as we hold the daily middle band on the rally, then I'm expecting this to go down. Could we nonetheless go back to retest the highs? Always, yes. But I think the bears actually have pretty much impressed. We will see. Why am I thinking this is probably going to go up for another day? Well, for starters, we've still got an RSI 14 buy signal fixed, and that hasn't made target yet. I'm thinking that we're likely to see another day, and we may see, of course, another test of the daily middle band, which will be lower, of course, than it was last time it was tested. But while we are doing that, the bands will be expanding, will be lowering, and by the time it starts going down steadily, that increases the range to move away, because it doesn't really matter. It doesn't matter on all instruments. This thing about the daily 3SD lower band, but it does actually tend to matter quite a lot on the equity indices, unless we are seeing a really, really wild move. All right, let's go back to the others. Okay, looking at the hourly charts. Very nice looking rising wedge here. Now I've drawn in a potential triangle here, and I am wondering about a possible triangle, but that triangle, of course, is also a potential head and shoulders. Is it as nice as the IWM pattern? No. But it's decent. We will see how that goes. But this is a fairly decent looking classical triangle, so I'm watching it with interest. That's a possible bullish pattern, although on the count here, I'm not entirely sure that would be bullish in this instance. Nothing on the 15-minute. Nice trend line. So that is pretty decent. Looking at the Qs, we've got, again, another very, very similar head and shoulders here, and this one has broken down slightly already with a target in the 556 area. So I'm mainly watching, I gotta say, the IWM pattern and the down patterns, because those are the nicest, but these certainly are breaking down, and I'm considering them seriously as well. On the 15-minute chart, we've got another RSI 14 buy signal, which has not made target yet. Looking at Dire, because we reached the resistance trend line again, I redrew the rising wedge support, so that hasn't broken. We've actually made it pretty decently. We got lower last time, but this is the first time we've actually seen it close below the daily middle band. We might see a break back above it during this rally, but I'm thinking if we're going down, I'd expect that probably to last a day or two, and then we'll see another leg down. And certainly there's plenty of bad news to be going down on. Honestly, it's a bit of a miracle that equities have managed to get up this high. So I'd be looking for a breakdown in the wedge here and there. Here we've got a very nice looking level top, which would deliver a decent move. Nothing really in terms of the 15-minute here, but I'm quite liking another day's rally, maybe two. And then after that, we'll see if the bears have got the juice to deliver a really decent move before the end of the month. Okay, let's have a look at DAX and Nikkei. Okay, DAX, we've got a break back below the daily middle band, made it back to the lower band as well. Obviously, the support I'm looking at here mainly is the 50 DMA, just as on the SPX, I'm looking at the 50 DMA. Let's have a quick look at that on IWM as well. I don't think, are we close to, no, we're not really close to a big one there, except I would note that if we get down to this head and shoulder target here, then that is the 200 DMA there. It's let's have a quick look at Nikkei, which is still holding the daily middle band, but it's starting to look as though it may well fail. We've got an RSI 14 sell signal fixed there, and I'm leaning towards that making target, but not necessarily now. DAX, nice looking double top. And of course, we've got the 200 DMA, which we are testing at these lows. A break below it is a significant support break. All right, let's have a look at the, I think the SPX is testing the 50 DMA. And that's the 50 DMA here. And we opened below it, but closed back above it. So that's still holding a support at the moment, but obviously, if it breaks, then it opens a move considerably lower. Would this head and shoulders get us back to the 200 DMA? No, I've got that in the 6100 area, and I'm not really seeing that as a doable target within November. Impossible, but unlikely. Looking at the Qs, again, we are testing the 50 DMA. I've got that currently at 605.72. We closed a bit above it, but obviously spent a fair amount of the day below it as well. And on Dia, I'm not sure we've got one on Dia, which is particularly close. The 50, we've got the 50 at 465.97. So I've got that. For some reason, I've drawn it in as dotted, which means so that's it there. So yeah, we tested that in the last move down. That's going to need to break. But obviously the 200 DMAs are significantly further down. I'm thinking if we do see a larger retracement here, we'd probably still respect those. I'm thinking if we are going to see something that goes through those, I was thinking that's probably in January. All right, let's have a look at DX. Okay, DX. This looks like a bull flag, which is underthrown. We did break down below this rising support trend line here, and that was unfortunate, but I don't think we broke the corresponding trend line on the RTH chart, which is the main one I'm watching. We've got a weak 60-minute buy signal fixed, and I'm leaning towards a breakup, and you can see at the end of the day on Friday, we were reaching this bull flag resistance. I've been talking about this in the morning, of course. All right, let's have a look at currencies. Well, let's have a quick look at the other currencies first. Okay, this looks like a bear flag, which is starting to break down. That fits with the dollar going up. GBP USD, this looks like a bear flag. That fits with the dollar going up. USD JPY, harder to say, possible double top, but nothing really strongly to suggest that's what it is. So I'd say that was fairly neutral. This looks as though it's an IHS, which is trying to break up at the moment, or about to break up. It's not the first iteration of this, but I think the I quite like this, and that's a fit with the dollar going up as well. Australian dollar, hard to say. NZ, this is either an IHS which is broken up, which is showing no enthusiasm at all for being at the moment, or this is a bear flag as well. And I think that may well be the case. Although NZ, I would say, actually isn't part of the dollar basket. Mainly we're talking about the influential ones here, all the euro, the pound, and USD JPY. All right, let's have a quick look at the bigger picture charts. All right, on the bigger picture, as I've talked about many, many times, obviously we've got this bull flag. I've got matching bear flags on the euro. And the GBP charts. So these are all looking pretty good. And I am thinking we might make it all the way back up to the retest of the flag target, which would be the retest of this high here at 114.78. In the short term, while I'm looking for something far more modest, I'm looking for this double bottom here to break up, which is already just slightly done. Break up towards a target, which would be in the 104.05 to 104.15 area. Now, this isn't just the double bottom here. Something I was talking about on Wednesday, I think maybe last Sunday as well, was that we've obviously got this rising wedge here. This rising wedge could be a bear flag. So just as this was a bear flag. Now, that could mean that we're going to reject back to the low. In the short term, I've been watching the daily middle band, and we've not seen any conviction break below the daily middle band, currently at 99.39. At the moment, this looks like a bull flag, which is about to break up. I'm leaning towards seeing a retest of the high, and at that point, we get probably the real inflection point where either that can be a double top and it fails back down and starts heading back down to the lows, or we break up and start making some tracks towards 104, which is the scenario I particularly like. Will it play out? Only one way to find out for sure. EURUSD, we've got a nice looking double top here, hasn't broken down yet. On GBP, hard to say what's happening here exactly. This could be a bull flag, but far from certain. USD JPY, hard to say on the short term here actually, but I've got a possible RSI 14 sell signal brewing which I'm watching. But really, this I'm thinking that if we do see the move up to 104, then we can finally see a retest of this high here at 162 on the weekly chart here, and retest this high. This pattern here is one reason where I'm a bit doubtful about the US dollar getting much past 106. That might require this to overthrow here. I mean, it doesn't. I mean, sometimes, quite a lot of the time, actually, USD JPY kind of wanders off on its own. But really, if this is going to be supportive of the dollar, I think that support might run out here. So I am wondering if it'll get any further than that. USD CAD, I'm leaning towards seeing a retest of these highs here, and that seems a pretty good match with getting back to 104, 106 on the dollar. Getting through this might be hard. This is a range top at the moment, so I'm a little doubtful about it getting through that, but maybe we will see. Looking at Australian dollar, if we were to see a move back down to retest this low here at 0.551, that would set up a nice looking double bottom, which we and I'm looking for a reversal pattern here because we haven't really got one for what looks as though it might be a big move up. Because sooner or later, when the dollar does reverse, it's probably going to go down a lot. And the question is where it's going to go down from. We will see. NZUSD, we've got obviously this lovely triangle which has been forming for a pretty impressive over 5 years now. This has very decent support down here in about the 55 area. And I'm thinking that we may well get down to that area, but there's a pretty good chance we would find support there. And if we did, we'd have a nice looking double bottom, which would be pointing up. We shall see. In terms of the dollar, where I think it's going on the bigger picture, this is a rising megaphone. We've broken down from here, and I'm looking for a topping pattern. That topping pattern, ideally, would be a retest of this high here at 114.78. But sometimes you see a flag form, and when the flag breaks down against expectation, because it's the 30% odds to break down, but you still do see it happen regularly, at that stage, I would be marking in a target for that. And I think I might have marked that in on the weekly chart. Nope, I haven't. But the chart, basically, I would mark in from here to here, and then the arrow going down. I think I'd have a target in about the 80 area. Because sometimes you can find the bull flag, when it fails, becomes the topping pattern. Not saying that happens here. It is rarer. Normally, we just go back and retest the double top. The retest the high for a double top on this scenario. So we will see how that goes. But I'm a little doubtful, just looking at the other charts, whether this is going to get back to 114.78. And certainly, the US government is doing absolutely nothing to support the dollar to that degree. All right, let's have a look at the bonds chart. Now, bonds, we've seen some bullish action, which I was expecting, and that's made. So we've run out of the targets of the signals on the hourly charts, on the RTH charts I've been looking at. I'm looking for a topping pattern here. We could be forming the right shoulder on one now, because my lean is we're probably going to see more downside on bonds. That's only a lean, and I've been having a very careful look at the RTH charts, and I'm not certain about it, but that would be the lean I'm working on here. We've got already a pretty nice looking double top here on ZN. All right, let's have a look at the bigger picture charts on that. Okay, TYX. Obviously, we're still kicking around near the top of these highs here. This could be a little double top here, but I think what I'm mainly watching here is the potential inverted head and shoulders. Now, if we have a real loss of confidence in basically the US government's willingness to have a fiscal plan which makes it likely that the debt will be repaid at some stage, then we could see a breakup through here. And that's the thing I'm watching for, because what I was saying about a year ago when I did a post, and I'm planning another to follow up on that. What I was talking about a year ago was that this is the yield is to a degree. I mean, obviously, interest rates are set by bond yields. This bond yield is basically from auctions, derived from auctions of the 30-year bond, and bondholders demand more money the more risk there is. And one real risk for bondholders of US debt is that the budget deficit is 7%, and the government doesn't look as though it's giving any thought at all, apart from occasional lip service and saying, "Oh yeah, we're going to start paying back debt soon," to actually paying back any debt. If the bond markets have been actually pretty mild with the US government so far, and that's because the US government has and controls the world's reserve currency. If this was the UK, because actually we had a reckless prime minister elected, and she lasted about 3 weeks. She came out with a budget, the pound plunged, bond yields spiked, and she was out of office in 3 weeks. Now that's obviously not something that happens in the US, and the US has much more leeway because it's got the dollar, but that's what happens when the bond market loses confidence in you. Could we actually see the IHS break up and get this up to 9.5%? Yeah. In that scenario, if confidence is lost, absolutely. Is the US government doing anything to inspire confidence in its willingness to come up with a plan which involves actually paying back the debt at some stage? No. At the moment, they are fiscally reckless, and I was thinking the bond market might force them, or being scared of the bond market might force them to be less fiscally reckless this year, and we've not seen any real sign of that. The big tax cuts were lunatic, just as they were the first time when they were installed in 2018. That's one reason why the US is looking at such a serious debt problem now. Looking at the weekly chart, this looks like a bull flag. On the basis that it's a bull flag, I'm thinking that TYX is going to head up to there's a possible IHS here. It's not particularly well formed. It is if you ignore this spike down here, but I wouldn't ignore this spike down here. I'd have to incorporate that in the shoulder, the way I draw these. But it may be it's going to go up a little higher. It'll pull back and form a right shoulder with a nice rally on buns, and then go up from there. But this looks like a possible IHS forming, a bull flag, and if we see a break over the flag resistance, which I've got in about the 48.85 area, then I'd be looking for a retest this high here at 51.53. That could give us a potential nested double top setup if the US government starts inspiring more confidence, or potentially get us to the neckline to start testing it again. We shall see. All right, looking at the TNX monthly chart, we've seen obviously more of this has been going down a little more than TYX has. Because this is based on the 10-year yield. But on the weekly chart, we've got an RSI 5 buy signal fixed. We've also got possible triangle here. This looks like a bullish consolidation, setting up a retest of this high here at 49.97. And I'm thinking that may be exactly what it will be. That could be setting up the double top to go down. But I have another one of these IHS patterns. Here, this left shoulder, head, right shoulder looks a little stumpy so far. Frankly, it wouldn't be harmed by taking another 2 or 3 years to make the right shoulder. And you know what? It might do that. We will see how that goes. These charts, I mean, obviously this chart goes back to 1975. These moves take a while. This is one bull market in bonds, starting here in 1981 and finishing here in 2020. That was 39 years. Wow. This is a bull market. This is a bear market in bonds, bull market in bond yields, of course, which realistically has been going 5 years and will probably run for another 10. In that time, we'll probably get back to 10%. So we'll see how that goes. All right, looking at the weekly charts, RSI 5 buy signal fixed. Again, I've been drawing in. They're not great trend lines here, but not all triangles have great trend lines here. I was breaking this down over the weekend. Obviously we had our head and shoulders here, which then failed. But here I've got a pretty decent looking falling megaphone. This is a pretty nice looking triangle, and this triangle would be a bullish triangle, and this would be A, B, C, D, bit of a pullback and up. So what I'd be looking for here really is to get back up to about 43.8 area, then maybe pull back to 42, and then head back up. And potentially, well, ideally get us back to a 48.09, and very possibly then break us back up to 49.97. I'm leaning towards a significant decline on bonds coming soon. Does not for certain. We haven't got, it's not the absolute clearest pattern setup here, but short term here we've got a nice looking double bottom. I'm liking the upside on yields and the downside on bonds, and that looks like the obvious way to go. If you look at TLT, nice looking rising megaphone here. Obvious target is to go down a bit more to the support here, but we've got a pretty nice looking part formed head and shoulders here, which I'm watching. We will see how this goes, but I'm thinking we could form a head and shoulders here and go down, but I'm not seeing anything here to contradict the picture that I'm seeing on TNX, which usually is my go-to for the bond charts. All right, let's have a look at CL. Right. Now, I've rolled all of these. I've rolled all of the oil, CL, HO, and RBOB into January over the weekend because it's time. NG, I haven't rolled yet because that takes another few days, maybe next weekend. All right, CL, what have we got here? Well, I've been talking about this as a possible bull flag, and I have to say it still kind of looks like a bull flag. I'm slightly skeptical about that looking at HO or an RBOB, but at the moment, that's best fit. This looks like a bull flag which is underthrown and is sitting back sitting back on the way back to this high here in the 61.90 area. By the way, just to mention, this price spike up here was, at least I've been reading, on the basis of the Ukrainians knocking out some Russian capacity, and that actually fits in one thing I'm saying. We've got, I'm going to be talking about obviously the big bullish setup and the possible setup to get back over 100. What I proposed before, and what that would back up if that is true, is that in the event that a lot of Russian oil comes off the market, that could cause a serious price crunch. And could cause oil to go up an awful lot. And actually, at that stage, 100 wouldn't be an unreasonable place to be looking. After all, oil was actually at 100 when Russia invaded Ukraine in 2022. That wasn't that long ago. People forget, people get used to lower prices, but actually it wasn't that long ago, and it could easily go back there, and I'm wondering if it's going to, and the pattern setup suggests that it will. Looking at HO, nice looking rising wedge, looks like it's topping out. We've got a potential head and shoulders forming here, and I'm thinking this may well be a pattern to take this lower, but of course if that is a bull flag on CL, that would suggest that obviously it might not go lower. What I would say is, for some reason, HO, heating oil and gasoline, which are the other two here, have been significantly more bullish and have gone up considerably more than CL has. All right, looking at RBOB again, looking for a possible reversal pattern here. The head and shoulders is not as impressive. That would be it there, and I'm wondering if it's going to retest that high and make the second high of a double top. We will see how that goes, but at the moment, all of these are looking as though they're in an interesting position. These look as though they may be topping out for a significant retracement. CL still looks as though it might retest the high, but if it went down and retested this low, we could get a series of decent moves down and possible buy opportunities on oil. Why would they buy opportunities? Well, let's get back to the bigger picture charts, where obviously I've mentioned these and every bigger picture webinar for quite a while, but just for anyone who hasn't seen it before, this is a falling wedge. This is it breaking up. This is forming a reversal pattern, and we've got the same pattern on heating oil with minor variations, and we've got the same pattern on gas oil with minor variations. All of them coming down from big highs in 2022, all of them falling wedges, all of them breaking up, and all of them looking for a reversal pattern. Now, since I started talking about this, we've now pretty much retested this low. Ideally, it would come back and do a full retest because it didn't quite get down to 56.06. Nonetheless, this is a decent looking double bottom, and this, on a sustained breakup after 78.40, would have a target in the 100 area. Looking at heating oil, I've been talking about this as a potential inverted head and shoulders, and actually it's pretty close to getting to the inverted head and shoulder neckline now. Looking at gas oil, this looks like a flag. I was looking for a retest to the low, set up a double bottom, and we've formed that double bottom. We've got a pattern here from this high here at 2.381, and that's now breaking up. I'm liking all of these to the upside. I'm going to get out a post next week talking about this bull setup and talking about why I think I might make target. And I'll get a lot of comments from people saying, oh no, Russia is winning the war and they're never going to fail. But actually, Russia is in an exceptionally weak position. They're not winning the war. They cannot afford to be losing either the people or the money that they're losing at the moment. And actually, I think within a year, it's possible if they persist with this war that they're actually going to collapse, and the Russian Federation may well just come apart. It's the last of the old. It's the last of the old empires apart from China, and when empires come apart, they come apart pretty badly. And when the USSR failed, and this is something that a lot of people don't pay attention to, they think about glasnost and this, that, and the other. But actually, the reason the USSR fell was because of oil prices. They ran out of money. The old-fashioned, routine, fairly boring reason, but nonetheless, very real reason why states fell. And Russia may be about to fall for the same reason the USSR did. There was a big decline in oil prices because oil prices were over 100. When they invaded Ukraine, they've now been kicking around like 50, 65, 55, 65. It cost them 40 bucks to get it out of the earth. This is a major, major decline. They also expected the campaign to last 3 weeks, and it really didn't. It's cost them an awful lot more time, treasure, and people than they are expecting. The Russians are in a very, very weak state, and if they collapse, as the Soviet Union did, then an awful lot of their oil may come off the market for quite a while. Now, the reason that's important is, at the moment, including the Russians, there's like forecast to be about 2 or 3 million barrels a day surplus of oil for much of next year, and obviously that's going to depress prices. Without the Russians, well, the Russians have been producing about 9 million barrels a day, and honestly, I think we may be down 3 million from that already. In terms of the damage that the Ukrainians have already done to their refining capacity, and now also to one of the main ports they're shipping oil out from. They're going to continue doing damage. I think much of that Russian oil may come off the market, and if that happens, well, I think that may well be the trigger for oil to go back over 100. In which case, you're looking at the big long of next year. We will see whether that develops, but certainly the pattern setup is very nice. This is sweet. Do we have the positive divergence for it? No, that's something I'm not really seeing an awful lot of. But nonetheless, that's not required. That's just nice. Do we have a setup where this could head back up a lot of the way back into the 2022 highs? Yes, we do. And we will see whether we'll make that. Now, I would note that these highs here, of course, were made in part because of Ukraine. So you remember, if you were trading at the time, the big oil spikes we had at the time, but also they were still well up before then. But oil, Ukraine is what took it. I think they invaded in March. Yeah, so I mean we were already significantly into the uptrend, but this is what gave it this top. But I'm thinking we could be heading back up there. We'll see. All right, looking at natural gas. Natural gas, we have a weak RSI 5 sell signal that's fixed. We may be losing that on the monthly chart. But I haven't marked it as lost because, of course, it's not the end of the month yet. And we have to see the end of the month candle. If we go down significantly in the meantime, then this sell signal may not fail. And I'm thinking we may well go down quite a bit in the meantime. Why am I thinking that? Well, we're reaching a resistance area here. I'm not seeing an awful lot of risk to go higher. We are looking fairly oversold, but the main thing I'm looking at is daily RSI 14 sell signal fixed, daily RSI 5 sell signal fixed on the daily chart. What do we have for this move up, which I was expecting to be, if you remember me talking about 3 months ago, I was talking about this going up $1.50, maybe $2. Here it is, $2. Do we have a nice pattern from the lows? Yes, we've got a pretty decent looking rising wedge. I'm thinking we may well be turning here, and we may well be going down a long way. But what I'd be looking for here is really either the 50 back, i.e. drop a buck and then maybe continue higher, or a full reversal of this move we've seen over the next few months. We'll see which way it goes, but at the moment, this looks like we are making some kind of a high, or we are very close to it. So natural gas looks like a short. In terms of the daily charts here, This is nice. I like it a lot. Obviously, we've got some way to go. I'd like to see it get back below the daily middle band, which is currently at 4 and rising strongly. But the negative divergence here is telling a very, very nice story. All right, let's have a look at the gold chart. Okay, gold, we've had a head and shoulders here, and we had a head and shoulders on SI, and we've had a head and shoulders on palladium. All of them broke down, and all of them have now failed. On SI, we actually failed and went directly back to the high. This is a potential level top here now. We had an IHS that formed, broke up. We were tracing it all the way through, and it's looking pretty damn good. This is a possibility where we could see a harder fail to make a larger retracement. Now, in terms of gold, what we could do here, we've got a head and shoulders, it's failed, and normally I'd be looking for a retest of the high unless we were forming a bear flag. Sorry, a bull flag, in which case we'd be looking potentially at A, B, C. I'm thinking we could see another leg down here, and I'm watching out for that. Looking at SI, looking at palladium, wondering about that here too. This could be an inverted head and shoulders to take us back up into the high, but not seeing an awful lot backing that up at the moment. I am wondering if we might see a fell lower here and do another leg down. On platinum is one of the reasons I'm thinking we might see another leg down. I drew this in as a possible bear flag that might be forming, and since then it's come down and made this low here, which is very much saying this is a bear flag forming. Now, bear flags will normally break down and retest the lows. Not always, but 70% of the time they will. HG, I've got a possible nested double top here, and I had a double top that broke down, made target, little IHS broke up here, and that made target too. And I'm thinking we may be forming a head and shoulders to come back down again. I'm watching the main double top support here in about the 4.82 area. And if we see a sustained breakdown, well, that could take us a lot lower. And I'm thinking we may well see that. All right, let's have a look at the bigger picture charts. On gold, monthly chart, we actually went through my trend line a bit here. I was thinking this might... well, I was expecting it to break, but I mean, I was thinking this was a possible higher at this trend line, but I'm thinking we may actually get up to this trend line, which, as this is a log chart, could be 8 to 10,000. I'm thinking we may be at the still well in the move that to take us a lot higher. One of the reasons I'm thinking that is because we've been going through all the negative divergence. We've got nothing here really suggesting we're going to see a high soon. And normally, when we see big highs on oil, normally we get an indication. Having said that, on a scale of this chart here, which goes back to 1979, you never have that many examples. But generally speaking, you see something. And at the moment, we are just heading through, and I'm not seeing anything to suggest this is about to fail. Right, looking at the gold chart here on the monthly, not a lot to see. No RSI divergence, nothing on the weekly either. On the daily chart, no divergence here either. I am wondering whether we might do this ABC, and I'm watching the daily middle band of support. That's at 4065 at the moment. Break and convert that, and we can see another leg down. And I'd be wondering about a possible move to test this trend line here, currently in the 3600 area and rising. All right, looking at silver. Silver, we've retested the high, not quite on this chart, but we've retested it on the future. No current negative divergence here because we haven't retested it on this chart. Is it going to do that? I don't know. It might. If it does, it would significantly improve the negative divergence here. On the silver chart, we've got a weak RSI 14 sell signal fixed, nothing on the RSI 5, possible double top here or possible flag forming. Lower high always increases the chances you are forming a bull flag rather than a double top. Looking at palladium, looking at the weekly chart, we've got, obviously, we're holding this moving average here, which is that's the 200-week moving average. 50-week moving average, which is often important for support, is a long way below. We'll see how that goes, but this looks pretty good to me. I'm liking the upside, and we're holding the 200-week moving average as support. Could we go a bit lower? Yes. Would I like to see this level hold? Yes, because I'm thinking on the bigger picture, this may be a breakup, and this maybe an inverted head and shoulders, left shoulder, head, right shoulder still forming, and I'm thinking we could see a big break up from here. And I'm thinking the same on platinum, where I'm thinking this is a decent looking inverted head and shoulders, which is already broken up with a target and retest this high here at 22.90. I'm pretty bullish on metals overall. I am thinking we might see a bit of a retracement first. On the weekly chart, we've got a possible RSI 14 sell signal and possible RSI 5 sell signal brewing on platinum, and that's why I'd like to see the uptrend resume fairly soon, so those don't fix. On the daily chart, we've got an RSI 14 sell signal fixed. Nothing a huge amount to see here. Obviously, you can see we're holding the daily middle band again. And again, if we can hold that, then we can go up directly. Otherwise, I'm thinking we may well see another leg down in what would likely be a series of bull flags forming. All right, copper on the monthly charts, we've got an RSI 5 sell signal fix, which I'm taking pretty seriously, and one reason I'm expecting this to turn down. Looking at the weekly chart, RSI 5 sell signal is brewing, hasn't quite fixed yet. On the daily chart, we've got an RSI 14 sell signal fixed and a very nice looking potential little double top. So I'm thinking that double top may well break down and deliver a move which takes us most of the way back to this July low at 4.31. Bigger picture, demand for there is a lot of copper demand from the build out that's happening on AI at the moment. If that all happens, then that's going to take quite a lot of copper. What I would say though is the tariffs, and the tariffs on copper and aluminium will not get struck down if the emergency powers which the administrations have been using are struck down by the Supreme Court, as they should be and probably will be. That won't affect the tariffs on copper and aluminium, and I think steel. That tariff is going to suppress demand. We've already made some pretty impressive highs by historical standards. These are elevated levels. I'm thinking the lean is down, and I'm taking this RSI 5 sell signal seriously. These typically do deliver, although this one here failed, I would note. But I've got another 3 which delivered here, and historically these have tended to deliver pretty well. All right, great. Let's have a look at GDX. All right, GDX. This I'm wondering about. I'm thinking either we're returning to the high or ABC. To have another leg down. Either way, thinking it's bull flag forming, same as GDX. Not a lot to see in terms of the daily chart, no divergence. Possible head and shoulders forming here, but it's not great. I'm looking at the hourly chart here, and this is a triangle. Target is really a retest of the high here, unless we do an ABC and continue down and just form a larger pattern. So again, on the metals, mainly on the precious metals, in any case, I'm thinking we're forming with either in bull setups which are broken up with the target to retest the high, or we continue and form larger bullish setups with another leg down, which would still then ultimately be looking for a retest of the high. All right, let's have a look at the other commodities. KC. KC, we've got a little double top here, which is broken down without a great deal of enthusiasm, with a target at a retest of the October low, which is... Oh, late October low. That's there. Okay, that makes sense. In which case, that's not far below, and I'm leaning towards making that. But we're not. I'm thinking we might see a lot more conviction to the downside soon. I am wondering, because they're not showing much conviction now, whether this might retest this high here in the 415 area, but it's probably going to just kick around and then go down. SB, we've got a nice looking double bottom here, which I've been watching for quite a while, and it's now broken up. I'm thinking we've got a target here in the 15.43 area, and I'm not seeing anything particularly suggesting we're not going to make that target. CC, we had a bear flag, it broke down, retested the low, and we've now got an inflection point. Is this a bottoming pattern to go up, or is it going to continue down? At the moment, it's continuing down, and I was saying that really there are plenty of reasons for cocoa to go down, so I'm not that surprised to see that, and that may well continue to be the case. Looking at CT, we have a slightly reluctant looking chart. I can pull up the CT chart I was looking at if it's going to struggle to get that up. So bear with me a moment. All right. Looking at the CT chart I prepared earlier. All right, I've got a nice looking falling megaphone here, and we could see a move up here, but at the moment this has been sliding pretty impressively. Possible 60-minute buy signal. That actually is that's a hit pretty much on the possible near miss target. We could just continue down here. I'd prefer to see it go up, but I do have a scenario where it goes down and retests a significant low, which I'll talk to you when we get to it. On lumber, okay, lumber speaking to us. Good. Here, I'm leaning towards seeing a continuation down, and at the moment, that's what we're seeing. This looked like a double bottom, but it's continued down, and I'm thinking that may well continue to be the case, and I've got a target a long way down. Looking at ZW, ZW, I rolled this into March, as I did the CT chart, actually. And we've got rising megaphone here. It's broken down. I'm wondering if this is a bull flag setting up a retest this high. Then potentially we go down. We will see how that goes. On corn, we saw another move up that made a pretty old looking, after eventually this broke up in August, and it finally made the target with this move here, and we've seen a strong reversal there. We had a sell signal, made target, and we may see further down from here. Got more about all of these, say about all of these on the bigger picture charts. On wheat, this was a bull flag. It broke up, and we've gone a lot higher. Sorry, on soy rather. Again, we had a sell signal, pulled back. We had a bit of a pullback on Sunday, but I've got more to say about this on the RTA chart. ZL, this looks like a bear flag, which is breaking down with the target a retest of the low. That could set up a double bottom pattern when we get there. We've already got a decent double bottom pattern, but sometimes you just need to do it again. 60-minute sell signal has reached the possible near miss target. On live cattle, possible double bottom here, and I would say that we've reached the first of this big double top here, the first of the two targets we've reached on Friday. That could be it for now. We will see. On lean hogs, nice looking falling wedge here, and that still looks pretty nice, and we made it back to wedge support, so leaning towards the upside, because normally these would break up. So we will see. But it's a pretty decent looking falling wedge. This is a 70% bullish pattern. All right, let's have a look at those on the bigger picture charts too. And coffee. Coffee is in rarefied territory by long-term standards. So normally it's traded basically under 2. So we've managed to get up to 4.4. I'm thinking we are topping out and likely to go lower. Possible nested double top here. Could see another retest of the high before this breaks down, but this could break down directly. I'm leaning fairly strongly short. On the weekly chart, we've got a weak RSI 5 sell signal fixed, and yeah, that's a weak one. Okay. Daily chart, we've got an RSI 14 sell signal fixed. Again, same pattern, same setup. Looking at it on the slightly closer up. Looking at sugar on the monthly charts, we had some positive divergence and we lost it. And we've been continuing down here through a succession of possible reversal setups. But on the bigger picture throughout here, we've got this head and shoulders, which is broken down with the alternate targets in the 9 and 6.5 areas. The further we go down, the more likely it is we're going to head off and make those targets. I basically drop from the current 15 down to 9, so drop 40%. That needs to be borne in mind if you're thinking about going long on sugar. On the weekly chart, no current divergence, possible wedge here, and I've got a possible alternative wedge here too, but I've got nothing particularly convincing. We've got a little double bottom here, which is starting to break up, but that would deliver a small rally. At the moment, I'm leaning towards that, heading towards the downside. We had an RSI 5 buy signal here, and that has now already made target. All right, looking at cocoa. Cocoa, again, historically, we traded a lot lower than this. This was a real outlier. So we saw a significant breakdown below this 64.27 area, and it's been sliding downwards from there. Am I taking these targets seriously? Not particularly, but I am thinking this might be heading back in a reversion to the mean to the longer term prices, which the top of those really was 38.26. Now, this isn't an inflation adjusted chart, but nonetheless, this is going to look an awful lot more sustainable in the 3,000 area than it looks at now. Looking at the daily chart, no current divergence, nothing suggesting really this is going to turn up. I have got a possible wedge which I'm watching here, but there's nothing really to suggest this isn't actually going to go down quite a bit. Looking at wheat, we've got an RSI 5 sell signal that's reached the possible near miss target. This looks like a bull flag forming at the moment. It might not be. But we've got a double bottom which is already broken up with a target up here, and we've got a potential larger double bottom, much larger double bottom here. So if this is a bull flag, we could head up quite a long way. We shall see. All right, looking at corn again, I've got a fairly bullish setup here. We've just broken up over resistance, got a lovely looking double bottom. We'll see how that goes. In the short term, we've got a weak RSI 14 sell signal fixed. We're pulling back a bit, but this is the pattern you didn't see on the weekly chart, which is a very nice looking IHS, which has broken up with a target in the 495 area. Now, as long as this respects and stays above the right shoulder low, which I've got at 409.25, this is fine to go up. But often you see a break up from a inverted shoulders, and then you see a pullback, and then you go up. It just needs to respect that level, and that target at 495 remains on the table. Looking at soybeans, I was forming this bear flag had been forming all year, and has now broken up. So the question is this a sustainable breakup? And it looks fine so far, but on the daily chart, I would note, in the short term, we've got a possible RSI 14 sell signal brewing, possible RSI 5 sell signal brewing. We've got a wedge for this latest move up from the low. I'm leaning towards seeing a retracement here, possibly a full rejection, but a retracement. We will see how that goes. That retracement, ideally for me, would probably only go back to about the 1070 area, because this is a flag which is broken up with a target in the 1170 area. So I'm thinking we see a bullish retracement, and then we probably head up to that target. We shall see. Go down below 1070, and we might be looking at something else. All right, looking at cotton. This is a huge falling wedge from this enormous high in 2022, and we've got down to 57.89, and we've got a wedge. It's broken up, and we've got a lovely looking double bottom here already. So really, this could be romping off to the upside now, but it's not. I'm wondering if we might need another retest of this low, although I'd prefer not to see it. But at the moment, I'm not seeing an awful lot to suggest that we aren't going to see it. And at the moment, it certainly isn't going up. On lumber, we've got a lovely setup here, because this is a flag which has been much better behaved, and looks as though it is going to break down towards the target on the downside. Now, that is also supported by, I was talking about this when we were making this high here. I was saying that may well be the second high of a double top, and might be a top which would last for quite a while and take us down a long way. Since then, we've actually broken down from a double top with a target in the 360 area, and of course, if we were to get back, this flag target would be at a retest this low here at 352.50. I'm thinking this may well go down a long way. To do that, we're going to need to break down below this flag support, which I've got currently at about the 490 area, and we will see. In the short term, we have sort of a bit of a rally there. I'm not sure how that does that fit with. Hang on, wait a second. Let's have a quick look at lumber here. All right, I didn't roll this weekend, but I think this is we're actually looking at the next contract. This is about to roll into March, and maybe we're looking at that. Frankly, the volume's still in the January, which is why I hadn't rolled it, but I am wondering if that's what we're seeing here, because it doesn't fit with what we're seeing on the futures chart. We'll see how that goes, but I think really this is a double top. First high, second high, it's broken down, lower low there. We're seeing a bit of a rally here, but I'm expecting this to go a lot lower. We shall see. All right, great. In that case, let's have a quick look at crypto, although I've got a chart to recreate there. But let's have a look at Bitcoin. Okay, Bitcoin, we've got, hang on. I'm hoping my chart will be nice. All right, let's have a look at the daily chart. We've got a double top here, which is broken down with a target in the 88.3 to 90k area. I'm leaning towards that making target now. And you can see we're not actually that far off the lows. If we had the weekly chart cooperating, Right. Okay. You can see that we've actually also closed. I was talking about this 50-week moving average is a very important support level here at 102, and you can see we've closed a long way below it, or at least we're about to close a long way below it. I think we have closed. Yeah, this is the new week starting right here. So that is a major support break. I'm expecting to see this target made in the 88.3 to 90k area, and potentially to go lower than that. We will see, but that is a good target and it's looking pretty solid. And I would say that looking at the others, we've also got on Solana a pretty good case for going a lot lower. We've got, this is a head and shoulders here. We broke down, we went back and tested the broken head and shoulder neckline, and then we've continued down. Now I've got a possible trend line here which is close to being tested, but really this pattern has a target at a retest this low here at 95, and at the moment I'm not seeing much reason to think it's not going to make that target. This is looking encouraging for the downside, and this is one reason why I'm thinking is, of course, these tend to go up and down with equities, and there's been no reduction in that happening this year. And if we're going to see a further down on equities, then of course that fits with this heading down to that target, which at the moment looks the obvious next place to go. Looking at Ethereum, we've again got a head and shoulders. Again, it's broken down. Again, the last rally back tested the broken neckline, and again, it fell there. This could be a double bottom here, but I've got to say, this has got a target in the 2050 area, and that's looking pretty good. We shall see how that goes. All right, great. In that case, I think that's a wrap. Everyone take care, and I'll catch you guys again on Wednesday. Take care.